Now, we do have someone named Peter Brandt, who is a classical chartist and someone that I admire, respect, and follow, basically stating, or better yet, asking the question, what we're seeing on the NASDAQ, is it a breakaway gap, a measuring gap, or an exhaustion gap? And depending on what kind of a gap up this is, now many people have shared their theories, but I think I'm somewhere in the middle on this and slightly more bearish, at least from the NASDAQ side. Now, that doesn't mean I'm bearish on the crypto market. The crypto market can rally well after the stock market. We don't want to see the stock market breaking down really hard because then it's likely the crypto market's going to follow. What I'm simply saying is, even if we are close to an all-time high or a top in the stock market, as long as it kind of sells off and chills in a range which still remains the top, then crypto can actually have a chance to rally, as a lot of money might rotate and flow into the crypto market. Either way, one trader named Abdullah said he finds it highly likely that this is an exhaustion gap, which is occurring at the end of a prolonged uptrend, and that when you take a look at oscillators such as the RSI and stochastic, they are both in overbought zones on the weekly time frame. Matter of fact, even when you look at Bitcoin, yes, currently still in a bull market trend. Doesn't mean that we're over. Doesn't mean we're not hitting new all-time highs. No, that is not the case. I still think we can make some new highs. I am simply saying we are getting near to the end of the trend. So I would take far more risk in these ranges down here than I would up here. That doesn't mean we still can't see at least another 50% or 100% move on a Bitcoin and multiple hundreds of percent on something like XRP in the same time. It's just that you can afford to take more risk here because you were already down 50, 60, 70% on Bitcoin. And so the majority of the altcoin market was down 80%. And anytime you see the best, the biggest, largest market cap cryptos down 70+%, that's a good time to add to risk. When you see it near or close to a new all-time high after a prolonged uptrend going back to December and January of 2023, it's important to note that yes, we can see a blow off top just like the NASDAQ is seeing, but we're probably getting closer to the end of this trend, which leads me to believe that 2026 might be actually more bearish and we're not going to get this 5 or 6 year cycle just based on all of the new incoming information. And you'll notice that sometimes I do flip-flop on my opinion as new information comes and goes. And so that's what the dynamicism, or better yet, how dynamic you have to be when you approach markets. And so taking a look at Bitcoin looks very similar on the RSI to, let's say, the NASDAQ, where we are seeing not only oversold, but a very strong bearish divergence from a weekly perspective, where we're seeing a series of higher highs on the price, but we're seeing lower highs on the RSI all the way into the previous all-time high. So in order for this Bitcoin bull market to continue and the crypto market to continue and XRP to hit new all-time highs, we're going to need to see Bitcoin hold this range of $109,000 to $107,000. And if it fails to hold this range, it might be the end of the bull market, considering the RSI might be giving us a very early signal going all the way back to March of 2024. So really important to note, we're seeing a massive gap up, and I do believe that Abdullah is correct in assuming it's an exhaustion gap. In other words, you see the market rally and gap up on an exhaustion pump before it finally tops off. And afterwards, you tend to see a bit more volatility in the markets. So then why am I being bullish in the title of this video? Because I believe we're likely going to see something along the same line in the crypto market. And the crypto market can rally a lot harder, and sometimes in certain environments, even a little bit longer than many equities and the stock market. So we're going to have to pay attention to that $108,000 to $107,000 level. 109 on the weekly is totally fine, but if we cannot hold that range, then yes, the markets are likely going to be cooked. Still, things are looking really bullish from the fundamental side, as on November 4th and 5th in New York, you have some absolute titans of traditional finance in the Ripple Swell Conference. People from DBS Bank, Bloomberg, NASDAQ, BNY Mellon, Franklin Templeton, Citi. We have Maxwell Stein, the digital assets guy behind BlackRock, showing up. The largest bank in the United States, one that is systemically important, JP Morgan Chase, MasterCard, CME Group, the largest derivatives exchange on the planet, Moody's. I mean, this is insane, ladies and gentlemen. State Street. And they're obviously mingling with the Ripple team. Brad Brad Garlinghouse, Chris Larson, Monica Long, and many of these players and key leaders will have influence in the right rooms and among Congress in order to continue to allow Ripple to expand their business and ultimately modernize the globe and put it on blockchain, directly using real world assets, which I believe is the next major thing that is going to bring trillions of dollars into the market. And on this page, if you want to look it up, ripple.com/tokenization, they talk about how they've put the right infrastructure and compliance in place to onboard institutions into the new world order of asset tokenization, something that Larry Fink and BlackRock have been very bullish on, especially after having seen the Bitcoin ETF IBIT be the fastest growing ETF in history, which really speaks to the demand. Now, the reason people would want to use the XRP ledger is because not only do they have 12 years of uptime, but they also have processed over $1 trillion, and they have all of these key pieces of infrastructure in place for virtually anyone and any major bank to take the assets of their clients and customers and put them on blockchain to tokenize them. But let's have a listen to Jazzy Cooper, the head of DeFi over at Ripple.
So tokenization is really just the digital representation of something in the real world in a digital format. In this case, we're talking about the blockchain. So taking something in the real world, it could be anything. It could be equity, it could be something that you own, it could be a certain privilege like the ability to vote, and taking that entity or aspect that's off-chain and bringing it onto the blockchain, representing it in a digital format. So typically, once you have an understanding of what you would like to represent, you'll use an existing standard such as ERC20 on Ethereum or an IOU like fungible token on the XRP ledger, and you'll actually take that real world thing and represent it on the blockchain. Now, why do you want to do that? What's the purpose of just tokenizing something for the sake of it? There isn't one. So effectively, after you've tokenized it, you want to go ahead and do something with it. You want to send it as a payment, or you want to trade it or collateralize it so you can access a loan and use one of the many advantages of tokenizing real things on the blockchain.
And so what exactly is going to be tokenized on the blockchain, which is probably the greatest opportunity in all of finance, something that not a single bank can ignore, again, which is why they've been so worried about blockchain and crypto technologies entering the space, because if they were not prepared or not working to build that infrastructure out, they were going to lose their market dominance. Either way, we can see by 2033, we're expected to see $18.9 trillion of assets tokenized, much of which will be fixed income, equities, real estate, funds, stablecoins, credit, treasury, derivatives, and even alternative investments through hedge funds and all sorts of other investment vehicles. And when you combine the fundamental bullishness of that consistent year-over-year growth, even with a potential bear market in between, at the end of the day, nothing can stop this. Considering now Canary Funds is going to have a spot HBAR and Litecoin ETF, which nobody expected to be launching first, and are effective and begin trading on the NASDAQ tomorrow. Litecoin and Hedera are the next two token ETFs to go effective after Ethereum, which is actually quite a shocker. Then confirmed by Eric Alchunas, the NYSE has also certified 8A filings and posted listing notices for Bitwise's spot Solana ETF under Grayscale as GSOL, which will convert Monday. So now we're actually seeing the results of these spot ETFs entering the market. Again, another very bullish piece of news, even if it's not XRP, which leads me to the next point. The fact that we're getting Solana, HBAR, and Litecoin essentially all but guarantees that this year we will be getting a spot ETF for XRP. So you're going to want to watch that news very closely.